Good day, ladies and gentlemen. Today I want to teach you a strategy that you can use to make money in the forex market. Okay, so this strategy is actually very simple. So even if you're a beginner trader, you'll be able to execute this strategy without any problem. Okay, so what do you need in order for this strategy to work for you? The very first thing you need is an understanding of what order blocks are. If you don't know what order blocks are, just calm down. I'm going to explain the concept in this particular video. Okay, so the very first thing you need to know is that an order block is simply a region from which a lot of orders are already resting. Okay, it could be buy orders or sell orders. So if you're dealing with a bullish order block, it would be the last bearish candle. Okay, the last bearish candle before bullish impulsive moves. All right, so your last bearish candle before bullish impulsive move is going to be your what? Is going to be your bullish order block. Okay, so let's say this is a red candle. This last red candle before your bullish move is your bullish order block. So basically you are waiting for price to come back into that level in order to take a buy trade. Okay, so your bearish order block is simply the last bullish candle before a bearish impulsive move. So it's vice versa. By the time I show you the examples, you get to understand what I mean by bullish and bearish order block. Okay, so before showing you the example, there are some checklists that need to be on ground before you can actually categorize an order block as being valid. Let me make some changes here. Okay, there are some things you need to put into consideration before you take your trade from an order block. So what's the very first thing you need to put into consideration? Your order block should break structure. Okay, it should lead to a break of structure rather. So that's the first thing you need to put behind your mind, that there must be a break of structure, and most people don't consider this, so they end up choosing other blocks that are very bad. So that's the first thing. The second thing is there should be some form of imbalance before your order block, like an FVG. Okay, so FVG, as you already know, is going to attract price. So if your order block does not have an FVG, it's actually a weak order block. So these are the two things you need to actually consider. There should be a break of structure from your order block. The movement, impulsive move from your order block should lead to a break of structure. Also, there should be an FVG before your order block and you are good to go. Okay, so this is the very first example I have for you. When I was defining what an order block is, you would remember I said if it's a bearish order block, it's going to be your last bullish candle before the bearish impulsive move. Okay, so you can see that candle right there, that bullish candle, this one, that is your order block. All you just need to do is to mark out the order block with horizontal lines and wait for price to come back there, then you take a sell trade. As simple as that. Okay, so as a beginner trader, you should be able to look for this setup easily. You already know that if it's a bearish order block, it's going to be your last bullish candle. So look at this. I will explain why did I place my horizontal line here instead of here. I'm going to explain it personally. Okay, when I'm drawing my order blocks, I don't like having a wick above it. All right, so normally this is how the order block is supposed to look. I'm supposed to mark out just the boundary of this last bullish candle. Okay, this way, this is how I'm supposed to mark it out. But you would notice I moved this up to this point. Okay, so the reason why I do that is just a personal preference. I don't like a situation whereby my order block has something else above it. So it's more or less like price could play up to that level. So I'll just mark out up to that point as my order block. So everything in here is what I'm seeing as my order block. So this is like a zone I'm looking to trade from. All right, so basically that's just how I mark out my own order block. But if you like, you can decide to stick to the theory of your order block being the last bullish candle before bearish impulsive move, or if it's a bullish order block, it will be your last bearish candle before your last bullish candle before your last bearish candle before bullish impulsive moves. Okay, so let me give you another example. I've marked out some examples for you just to make it easy. So this is another order block here. Oh, I didn't explain some things there. Let me go back. some of the criteria I gave you. Okay, so what are the criteria I gave you? The very first thing, it should lead to a break of structure. You can see this downwards displacement. It led to a break of structure. You can see there is actually a low right here. Okay, there is a low which price broke as it was coming down. So the first criteria is met. The second criteria is there should be a fair value gap just below, just before your order block. And as you can see, the wick of this candle did not intersect with the wick of this other candle, so definitely there is a gap there. So the second criteria is met, so that order block is good to go. And as you can see, this current price action, so I'm not giving you a backdated or outdated price movements. Okay, you can see the way price tapped into it. Price tapped into it right here and gave us a reaction which would have made money with in the downward direction. Okay, the price is still playing around that region. So let's go to the second example I gave you. I have for you rather, the one I gave you just now is a bearish example. The next one is going to be a bullish example. So look at this last bearish candle. This is a bearish candle, right? So that last bearish candle before this bullish impulsive move is going to be my order block. But before I classify it as my order block, I need to check some criteria to ensure that it meets the standard of an high probability order block, because some of these order blocks are low probability. So there's a way we check it. Okay, and I've given you the secret. So this is actually a structure. This is like a swing high. Okay, so the impulsive move did what? It broke this swing high, so that criteria is met. Then we come and check the impulsive leg to see if there is a fair value gap there. And if you look well, you would notice that the wick of the top of the order block did not really intersect with that at the bottom of the order block. So this is actually a valid order block. Okay, so there's an FVG just before the order block, a fair value gap. All right, so let's see what happened when price came back to that level. Okay, look at this point, price came back to the level at this point. Okay, so price tapped into it and gave us, you know, an opportunity to actually make money in the upward direction. So basically that's just how it is. I think I marked out one more example. You know, the reason why there are spaces between them is I'm looking for high probability order blocks. There are a lot of order blocks in between, but I didn't choose those ones because they are not high probabilities. Either they don't have an FVG or they did not lead to break of structure. So that's just it. So look at this. Okay, what do you have here? This is the last bearish candle before that bullish impulsive move. Look at it. Okay, so I marked it out as my order block. What are the criteria? Did this impulsive move break structure? Yes, of course it broke structure. This high was broken by this impulsive move. So the first criteria is met. So let's check the second criteria. Do we have an FVG just before this particular order block? Yes, there's an FVG there. You can see that the wick of this candle right here did not intersect with the wick of this other candle. So this region will definitely attract price in the future. So we are good to go. We can take trade from this order block. You can place your SL a few pips below the order block. So let's see what happened when price returned there. Okay, so price went into the order block respecting it, did not go beyond it, and gave us an opportunity to actually buy and make money in the upward direction. So basically that's just how you execute this strategy. It is called the order block strategy. You can call it ICT strategy, whatever you want to call it. I've given you the secrets to it. There must be a break of structure from your order block, you know, and there should also be some form of displacement in form of fair value gap just before your order block for it to be an high probability order block. Okay, so if you got any value, please subscribe to the channel. I'll see you in the next video. Thanks for watching.